Yo, 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 welcome everybody to the Purpose Lab. I am Marlon Vickers. This episode today, we're going to be discussing building generational wealth, breaking cycles, and creating legacies. Man, we're going to get in today. It's going to be awesome. It's going to be phenomenal. Listen, this is like the 16th episode of the podcast, the Purpose Podcast. And we all about building purpose, generational wealth, helping you learn who you're supposed to be, and taking you to the next place, the next level where you need to be. Generational wealth isn't just about money. It's about creating opportunities, teaching financial legacy, leaving a legacy for your people, yeah, for the future generation. So in this episode, we're going to explore practical strategies for saving, investing, budgeting, and building wealth that lasts. So today I got my friend on, Tyrese Mayo, y'all. I'm gonna let him come on and introduce himself, and we're gonna jump right into it.
Like you said, man, my name is Tyrese Mayo, just a country boy from Baker Hill, Alabama. And I came across some beautiful information that I want to share with the community. And I think it's gonna really, really bless your soul to hear what we got to talk about today. I've been doing this going about 6 months now, so in this financial space, so I'm very excited about it, and I'm just ready to share the knowledge, man. I'm so excited about this podcast, and thank you for having me on.
Yes, sir, man. I'm glad to have you on, man. So let's jump right into this, man. What's the difference between income and wealth?
Income and wealth. Well, in my personal opinion, wealth is something that you can sustain for a long time.
Right.
You know, when we talk about wealth, we talk about how we say that old money,
Yeah, yeah, yeah,
old money that's gonna build a legacy for their family.
yeah,
That's more wealth to me. Income is I'm out here and I'm making a dollar. You
yeah.
know, I'm making a dollar, but I'm giving that dollar out. You know, that's my income. You know, that's why I hear people say you need multiple streams of income to even survive.
Fact. And that's true. And I tell people that myself. You need at least 7 streams of income.
At least
At least 7, because if one go down, guess what? You got 6 more where you can go make more money. Yeah.
I had seen a study and it was like in Alabama alone, you need to make at least $189,000 to even live comfortably. You
Mm,
know, and one income is not gonna do it. So
no.
that's why that wealth is so important because can't do it right now, but that wealth later on will set our family up. You know, or that wealth later on will have us sit straight because a lot, man, we young.
Yeah.
I think we forget that, like we young
Yeah.
and we just got to put our money in places.
So why is earning money isn't the same as building wealth? Because think about it, when you earning money, this is what I look at. When we say earning money, you earning a check, right? You're making bringing home a check. But building wealth is not just about bringing home a check. Building wealth, generational wealth, is about building it for your future, for your family, for your friends, for your people that come behind you. You see a lot of rich people, they do that kind of stuff. And to talk about what we're going to talk about tonight, I've learned this too. They get insurance and different things to
Yes,
build generational wealth.
yes.
Talk about that.
And then that's something that you know a lot of people don't know. Insurance policy, certain insurance policy will pay mortgages,
Yeah,
all type of car notes, everything.
yeah,
And like go back to the question, income earner and wealth. Like we said earlier, that income you taking that money and you spending it out. That's what it is. We're not taking that money and putting it in a place to where we're seeing it grow, grow, grow.
yeah,
Like you said, a lot of these people, rich people, are putting their money in places like policies, and it's different policies that you can put your money into to get money back, and it
right,
build compound interest. You
right,
know, there's just something we just don't have a clue.
right.
We don't have a clue with it, and it's amazing. As I go around and I speak to people, that's the kind of knowledge we lack. Everybody want to talk about getting to the money or getting that bag.
The
They,
bag.
they getting that bag, you know. What's the song? Spend it, go,
Eh,
yeah. You know what I'm saying? Everybody talking about go get a go your bag, but they ain't talking. Ain't no money in the bag when you got it.
right.
You know,
Yeah, you didn't get it for well, you just got it back.
you just got to. That's the different right there. Income earner and wealth. The
Right.
income earner gonna have that bag, but if somebody got wealth, they gonna have the bag and the money inside of it. That's the difference right there.
And I forgot to say this before we get started. This episode is it's gonna be sponsored by my people, Vibe Press. I'm coming out with some coffee mugs. I got some coffee tumblers. I got some shirts, and they're the ones that's sponsoring this episode on tonight, so I want to give them a shout out, and I got something special for you tonight too. But let's keep going. So
You said Vibe Press?
yeah, vibepress.org.
Shout out vibepress.org, man.
Yeah. They the ones sponsoring this podcast on tonight. So how wealthy families think different about money? What do you think about that? Because you got the average people, then you got the people that's wealthy,
Well,
and
the difference, I think, is the sacrifice.
yeah,
I feel like it's the sacrifice with the families who prioritize wealth first.
yeah,
Because, like you said, the average family, if you think about it, they live in check to check, so their instinct is to survive, survivor mentality.
yeah,
As far as somebody with a wealth who prides on wealth, it's about sacrifice and prioritizing where my money needs to go. Because the average person can live like a wealthy person if they had those sacrifices. Okay, I'm not going to spend this on getting all my kids $200 worth of Jordans, when I'm not in a financial space or I'm not finna move money to a place where I'm not ready to move it. And okay, I'm gonna cut down my budget a little bit. Instead of getting some Jordans or the newest kicks, I may need to go to Walmart. They have some fly kicks. If you look at most wealthy family now, they ain't in the drip designers or the Jordans,
no,
So that's the difference in that wealth and income. It's that mindset, man. It's just a sacrifice that has to be made. We got to start living by status.
yeah. They're not going to spend $200 or $300 on shoes.
No,
They go to Walmart and get the Walmart brand, but we like, I don't want no Walmart shoes. But the person that's wealthy, they'd be glad to get those Walmart shoes. And you go look at their house, they got a nice house, they got a nice car, they got good clothes, but they go to Walmart and shop.
go to Walmart and shop. I mean, the richest people look like the
Yeah,
average
average
person.
people. Yeah, you would never
Yeah,
know it. Yeah, and then some
yeah.
of
So
average vehicles, they don't drive.
average.
Yeah, they don't drive them fancy cars because they already know eventually, it's good to have them, but they gon' depreciate after a while, and you gotta have the money to keep up with it.
And you know what else? The difference between a wealthy family and the average income earner, however we want to call it, is I just had it's more it's discipline for sure. It's a word I want to use. I know it's gonna come back to me,
Yeah,
but it's a mindset.
yeah,
It's truly a mindset. The average income earner, that it's a status of I gotta look like this.
yeah,
I gotta look like this. I gotta be a part of the crowd. As far as somebody with wealth, it's like, I'm gonna be disciplined and I may not look like it now, but on the back end, what I'm building for the future, I'm gonna look like everything I want it to look like. And
right,
I think we just so caught up the average earner. I say we, because I'm an average income earner.
yeah,
I'm building wealth right now. But
yeah.
I think just for the longest we looked at the social status of it.
And I guess you really answered that question, but I was gonna say, what does generational wealth means to you, and why do you think so many people struggle to build it?
But to me, what it means to me, and I never knew about, I always heard about generational wealth.
Yeah,
But in my mind, generational wealth is I gotta, like the young, like run up a bag, get all this money, and then just leave it to the next person behind.
yeah,
And now I'm realizing like wealth takes time. Wealth is not an overnight thing. Wealth is sacrifice. Wealth is discipline. Wealth is saying, well, I want to start these 3 savings accounts. But instead of trying to dump all this money into my emergency savings, short term and long term, and then be broke, what I'm gonna do is I'm gonna take my time, build it brick by brick,
right.
put $25 in each account,
I'm trying to tell you.
$75 that you're gonna spend in a day for real eating out. So I'm gonna take that, I'm gonna put it right here, I'm gonna watch that wealth build. And it's hard to obtain because it's just that discipline, man. We wanna hold on to that dollar, we just hold on to it. My grandma used to always say, you're gonna burn a hole in your pocket the way you spend that money. You're gonna burn a hole in your pockets every time you get the money, it gotta go away.
And
So
that's a lot of times that's what we do. We get paid, and we can't wait to get that money. But
wait, we be counted up in our head, I'm gonna spend it.
matter of fact,
Not I'm gonna put this savings here, I'm gonna put it here, I'm gonna spend this.
yeah, we gonna spend it before we even got it.
Yeah. Financial literacy, that's the word. Most wealthy families are financial literate.
Yeah.
They've been taught about it or they
That's
research and
good
learn
right
it.
there. Yeah.
Yeah.
And
Well,
most, I'll just go ahead and say it, most African American families, we don't teach financial literacy.
no, we don't.
No,
We illiterate in financial. Yeah.
we teach go get the bag, but
Yeah.
You don't teach them, you know, to save money, put something over here. And the biggest thing is invest in something.
Investing, yes.
Invest in something, man. You know, take that when you get that bag, take that bag and invest it in something. You know, invest it in some insurance,
Mhm.
get you something good. You know, get you some stocks and all that kind of stuff. Go buy you some houses and flip them.
And flip them, yeah.
Yeah, that's how you create generational wealth, man. And you know, it's not holding on to it. It's like, okay, I'm gonna put it somewhere where it can grow some interest and
Grow.
make money for me. Yeah,
And putting and for me learning, putting that send your money in a bank account, man, it's just sitting there. It ain't getting no growth. Ain't making no money.
money, man.
It's so many investment places you can put about mutuals, CDs,
Yeah,
Roth IRAs is
yeah,
like I just learned about that and my mind is blown about Roth IRAs. You know, it just how it build 9% interest and you look up 20 years later and you have all this money that's cash. So
yeah.
yeah, man, those investment accounts are real. We just got to teach our younger kids that, you know, and even the older people, it ain't too late. You know, you just got to
No,
start it.
no, 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 no. It's not.
Yeah.
And this is a good question. Can someone with six figures still build wealth?
That already have six figures.
Yeah,
Yeah. Matter of fact, if they flip their mind, they already wealthy. If you got six figures, you should. There's no reason that you should ever want for anything.
yeah.
About like But when we talking about different level of people, different level of society, average income earner, they probably gonna blow through that six figures, you
Easy.
know, because they're not financial literate. But if you're making six figures, if you are a six figure 100,000, and there's so many places you can put your money to build it and let it grow till you never have to worry about going paycheck to paycheck. You know, when you get 65 at retirement age, you done. You know, so and we all gonna work till we 65. I tell all my clients, like, man, you gonna work till you 65. You know, so why not put your money in place so when it's time to retire, you know what I'm saying, you good.
Don't put me in that category. I don't want to work till I'm 65. I'm trying to create wealth now. So by the time I get close in my 50s, I want to be at a place where I can, you know, do something else besides work. If it's just working for myself, if it's just in the stock market or something, you know, I don't want to work till I'm 65. I want to be, I told my wife when she retire, I'm retired.
Yeah,
You're not
I know that is.
just laying around not doing nothing. I'm gonna be at the house doing something, you know.
Mhm.
Yeah,
And that's how I feel too. At 65, I'm
yeah,
not trying to clock in and nobody.
yeah.
No, no. But even with insurance policies, you know, I know a few companies where, you know, you get insurance policies, they help you with debt cancellation, they help you with
Right.
setting up Roth IRAs. So people don't understand there's an insurance company that will help you get on track financially. You know, it's amazing. I don't want to talk about the competition, but I just want to put the information out there, like,
Yeah, put it out there, man.
you know what I'm saying? Even like a whole life. You know, you do whole life. People when it comes to whole life though, it can be tricky. You know, it can be real tricky, and we just got to be very mindful of the agents you with, because we pride ourselves whole life, whole life, whole life because it build cash value. Meaning, okay, if I get a policy that's $120, when I pay on it after them 3 years, that 120 going to accumulate cash.
Yeah.
You know, that's why a lot of people holler whole life, whole life. You know, but they don't tell you is you got to wait 3 to 10 years before you start seeing it. It probably gonna cost a little bit more, but you know, people like, well, I'm insured till I'm 100. Well, the goal is not to be insured till you're 100. Who want to pay a policy insurance up to when they're 100 years old? Past 65, I want that thing to be gone. You know, so that's when you put things in place like Roth IRAs that help you build it up. So when you're 65, I'm good. You know,
They also got policies as well where for like your kids, you know, you can get them like younger kids, and then as
yeah,
they get older, you know, when they get maybe I think what 21, maybe 18,
21, yep,
they can
21. And then, you know, there's many Roth IRAs where there's this thing called a Rule of 72, right?
yeah,
The rule is if my child is just born and I take $1,000, and I set it into a Roth IRA. As you see, I'm all about the Roth.
yeah.
I'm gonna take the $1,000. I'm gonna sit it there, and I'm gonna sit it for 18 years. The rule of 72 says every other year it doubles your money. So with that $1,000 by the time they're 18 is just throwing out. Not this ain't concrete, people. It's just a ballpark number. Or for me doing research, you up and when they 18, they have $80,000, $90,000.
Yeah.
Just by starting with $1,000. And it's called the rule of 72 that we don't know about. So that's something when y'all see this, write that down. The rule of 72. I take $1,000,
I remember that.
I set it into a Roth IRA, a mini Roth IRA that's for my child with me as the owner of it. And by the time they 18, 19, they $90,000 in. That's what a lot of families do. So growing up, I saw people with trucks and cars. I'm just like, dang, man, that's that old money I'm talking about. They set it up way back then.
Yeah. And you know what? And we didn't know that, but that's how a lot of them pay for college.
A lot of them.
Yeah.
A lot of them.
A lot of them.
Way back, yeah.
Everybody, a lot of people pay for college that way. A lot of people struggling trying to figure out how you gonna pay. But when you got this policy over here and this, when your kids get to that age, you can take that money out, pay for college.
For college. That's what a lot of them do. And also a lot of people, what's so amazing is like their grandfathers, mothers would put their names on like the policies. So by the time they 18, 19, their grandmother done bought 100, 200, $300,000 policy when they 18, the money goes to them. 18, 21, the money goes to them. That's something that we have to understand as a people. When it comes to life insurance, it's life insurance, it's not burial insurance.
Right.
A lot of times we get,
We get
man, I just need another, put me in the ground, man. That's all I need. They don't need all. No, they do need all that. They need.
That's building wealth.
Yeah, that's well. Like I feel like an average family should have at least $1 million in coverage. Now, if you can't pay that, of course, it's then bump it at least 250. 250 when you in good health. I know a company is gonna treat you right. So we just gotta shift our mindset, especially when it comes to this life insurance game.
So how much one of those policies cost? Like
It depends. When it comes to life insurance in general, health is a major thing. And I don't understand it. I know I'm new in the game, but I feel like a person who's battling health or has some history with health, those are the ones that need life insurance.
Mhm.
But life insurance companies frown upon those people. And I'm just like, but why? But these are the ones that are getting closer and closer met to that time. Their family gonna need it, but you deny them. So health is a major part when it comes to any life insurance. And age is a major role. But as long as you are in good health and you don't smoke, no tobacco user, man, it can range. I just quoted a client who's 24 and she got $500,000 on her and her kids for around like $40, $50.
A month?
Yeah, that's just a month, $40, $50 a month.
That
She got $500,000. So her kids straight. Her kids said, no matter what, they said they locked in. So like I was telling her, you just stepped over in generational wealth, and you only pay 25. Probably the most you're gonna pay with that policy is $37, and it's gonna last at 37 all the way out until you're 65. So like you're gonna pay for what you get.
you can draw off of. I know they charge you interest on it, but like if you got into a tight and you needed some money and you can pull off of it. I can't remember which one it is.
See that's whole life,
Is that
but
whole life?
that's whole life, and that's another reason why people love it. But with whole life, you gotta borrow from it.
Yeah.
It ain't no, you don't withdraw. So
Yeah.
you're gonna pay that money back.
Yeah.
And if you don't pay it back, take it from your death benefit. So you needed $50,000 and you only had 100,000 and you ain't got the money to pay it back, they're gonna take that $50,000 from your death benefit. It costs about 25,000 to bury you. So now you got 25,000 left over because you ain't have the money to pay it back. With a Roth IRA, which I'm a preach about. It's all y'all hear me talk about. Roth IRA. It's a withdrawal. So if you want your money, you can get your money. Now with all policies at age 59 and a half, after that,
Mhm.
it's tax deductible. But before that, they're gonna tax you 10%. That's all life policies. So I know it's a lot of insurance companies don't tell that part, but you will get taxed if you try to get your money out
Yeah.
at 59 before 59 and a half.
Let's talk about breaking generational financial cycles. We got to identifying unhealthy money habits. Like as we talk about that now, and a lot of people they don't want to get no kind of insurance. but they got money habits that
Mm-hmm.
they spend their money on all this stuff that they really don't need, and they just wasting money. But we always want to build generational wealth. You take it, you go out to eat like on a Friday night, you go out to eat on a Saturday night, and you go out to eat on a Sunday night. Well, you don't spend easily a couple $100.
Easy a couple hundred.
Yeah,
Easy.
easily. And those are some, to me, I think those are some unhealthy money habits. I mean, it's all right to go out to eat, but
Mm-hmm.
you got to put that money back and
Yeah.
eat at home and save that money, and that goes back to wealthy people. They eat out, but they don't eat out every day. I mean,
No, they don't. They're gonna eat at home.
yeah. And
I,
most
I
of
think the way to break that, the
the
way to break that, like I said earlier, it just comes down to discipline. That's one
this
discipline is the key to almost all success in life. Because you can do it for a month, but when that discipline break down, you get back to that same old bad habit. It's just like I'm in that cycle again, like you said. But how do we break it? You got to be disciplined. If you feel like I'm gonna go ahead and take this money out now, if I got to give it to somebody who I know gonna keep it, I'm gonna do that and not spend this money. We gotta start. We gotta start small. Like I know me. I was a person. I can't. Nah. When I start building and saving, I can't keep it in my hand. Because I watch parents. They spend money so quick. So that's what I'm used to. A lot of times these curses come from, past generation, them not
yeah,
knowing,
yeah,
putting it out,
yeah,
putting it out, putting it out. So
yeah,
now I'm older. I got to put it out. That's what I seen my mom do. I got to survive.
yeah.
And I'm not thinking about the future.
We stay in survival mode instead of in building mode.
Yeah. So definitely got to be disciplined and then have those 3 accounts set up. Or you need a savings account, short-term savings and a long-term savings. That emergency savings, that's going, yeah, I got a tire, something happened. I need to go in here real quick. Okay. I got that money set here just for that. I ain't going nowhere else. I'm not going into my everyday spending money because I got my emergency. If I want to go on a trip, if I want to buy something nice for my wife, I got my short term savings.
Yeah,
This means I'm saving this money for the next year or two for whatever goal I have. And that long term, that's that Roth IRA. I am putting it out there again. You sit that money in that Roth and you just let it build. So I have 3 savings accounts that I'm not going to touch. When I start with $100 or $25, I'm gonna put it there. And once you start building with people to understand, it's a mindset. Once once I put that $20, $25 there, I'm gonna feel good. I got 3 savings accounts. I feel amazing, even though it's $25, and you just continue to build it. After a while, you're gonna forget about it because you have it prioritized.
oh yeah.
I got my bills paid. I got my savings, and then whatever left, I just got to play with.
See, I like I got a credit card now, and you use it, but at the same time, you get points and you earn money off of it. You build points off of it. So every time I go out to eat, I get so many points. If I go put gas in, I get so many points on it. And then once you get all those points, you can turn those points in, and you can
Mm,
get money. I was listening to this guy the other day. He was saying that he had like 3 million points on his credit card.
right.
And he never touched it. He ended up going to getting him like a 5-star hotel and a plane ticket off the points. Cause the point,
Right.
to get that room, hotel was like maybe, I think he said maybe about 6,000 points, or maybe yeah, about 10,000 points. Well, he got 3 million points.
3 million, yeah, he's
He said his plane ticket was like 600,
yeah.
6,000 points, but he was like, still, I mean, I think he might have spent, he's probably spent close to 1 million points, but he still had 2 million points.
2 million.
Yeah, so, matter of fact, he said he went on 2 trips.
And you went to a 5-star and, like,
And he
see,
said
that to
everything,
me, that's a form of short-term saving, like,
he said everything that he wanted, he got it. He said all the extra stuff that he wanted in the hotel room, he said add it in there. I want.
I know that right, I ain't gotta pay for it, add it all, yeah, I want room service and everything.
He said I want everything.
Yeah, I would've did the same thing, I ain't gonna lie. I would've did the same thing, I would've had a ball.
So that's why I like those credit cards that you can earn points off of, because you can turn those points back in to money. You can add it back to your account too. You can
Mm,
take those points off. So I'm starting, those are the small things that I like to do myself. And
but
you know,
if you have those cards that don't do points, you need to leave them. Yeah.
And matter of fact, I was watching somebody the other day, and that's what they were saying that if you might have been the same guy. He was like, if you got a debit card, that he said you need to store it away because it ain't making no money. I mean, they charging you to use it.
They charging you, right?
They
I was thinking about that. I used to be like, man, I got this credit card. I'm paying the money off, but it's the same money that I'm just spending my own money. And they charging me 24% interest. I'm like, hey, it's a scam, people. It's a scam.
Yeah, man. You got so that's why I went to. I got a credit card now that I earn points off of. So every time I'm using it, I'm making money.
Yeah.
Even though it's
So
still but I'm making on top of what I already spent. So even though I got to pay my bill back, but I got points on the side, so I can take them points and use it to do something else. I can even take those
mhm.
points and if I don't want to make a payment that month, I can take my points and use my points to make a payment, or I can leave my points sitting there, let them build up, and then cash them out and get money off of it.
Yeah, that's smooth.
Yeah, so I'm making money.
And if you're gonna spend money, you gotta make it. If it ain't on no bill, if you're gonna spend that money, make it. Yeah.
I was going. We already talked about this. You said it one time, but we're gonna talk about it again. What financial habits did you learn growing up?
I didn't learn a financial habit besides bad habits. There's spending your money before you get payday loans, credit cards, and just seeing it or survival. Anything that the money, I'm in survival mode, so whatever this money gonna do to help me survive, I'm finna spend it out. Really didn't get taught anything or truly about money. And even when people were trying to teach me, I was at an age where I ain't ready to receive it because I'm young and I feel like, nah, I got it, or I'm young and I feel like I got time. And then you look up, if I would have took that advice from my auntie or that advice from somebody I knew that said, hey, save your money,
Save it.
save your money, I would be in a better financial spot. So really learn some bad habits that I'm trying to break the curse on, so.
Yeah, that's you talking about breaking the curse. That's I think one of the biggest things we do is we live from check to check. And
Yeah.
your kids see you live from check to check. They might not know it, but when they get older, like then you realize what was going on because you find yourself in that same rat race.
Hmm.
Like, I borrowed from Bill to go pay Paul back.
Yeah, yep. Yeah, and now you in double debt.
Yeah, now I owe Paul and
Mhm.
I'll pay him.
Now old Paul. Now I gotta go find Will. Hey, Will, I need about $20. I gotta play Paul, so Paul.
And then we're gonna charge you interest. All right, now I'm gonna give you $12, but I'm gonna charge you about 20% interest on this.
So now I gotta pay. You know what I'm saying? Yeah. And I've been there, man. I'm 32, going on 33, but I've been all that. So I kind of had to learn through a trial and error. Yeah. What you trying to pay all these folks back and I make this much and I only got $25 left? Oh, man. And
Yep,
all of it going to debt?
yep. And I seen it. They sent me a loan the other day. Well, probably like a couple months ago. They was like, "We'll give you $6,000, but you're gonna give us 11 back." I was like,
But get what though? Somebody took their letter. They sent that to everybody.
yeah,
Somebody took their letter.
this doesn't even sound. Wait a minute.
They don't even sound right. Yeah.
I'm giving you 6. And you gonna give me 6, and I got to pay you 11 back?
11, 5,000 worth of charge. That's amazing to me. And I don't understand it.
I'm like, "Nah, I pass on that one."
Yeah.
I don't.
Nah.
That's how you know when your credit start getting better. You start getting all these credit cards in the mail. They try to
Yeah,
do that. They
they
try
try to start
to do it. Yeah.
Capital One, we're not Capital Silver
Yeah.
and all them folks start sending you stuff. Yeah, you doing something good.
And then they say, "Well, your credit score is going up. Since your credit score has changed, do you want to apply for this credit card?" I'm like, "Nah, I'm good." Mm, I
And
don't.
I learned how to debt stack.
Yeah.
That's something important. Debt stacking. So a lot of people, and it's such a simple I call it mathematical
You said that?
such a simple big debt stacking.
Okay. What is
So
that?
debt stacking says, let's say I'm just gonna do it simple. I got 3 credit cards.
Yeah.
One costs 200, one costs 500, other costs 750. All right, I'm trying to get out of debt. I'm tired of paying these different rates. So what I'm gonna do is I'm gonna focus on one card and pay that $200 card off. Once that $200 card paid off, I'm gonna take that 200 and add it to what I'm paying for my next card, that $500
Yeah.
card.
Right.
Pay it off sooner.
Yeah.
Once I pay that second card off, I'm gonna take the money I was paying for the first and second card, pay my third card off. You know, studies have said most people, let's say if you had 10 years worth of debt, you debt stack how like that, they're gonna cut it down by 6 years.
Yeah.
And that's something I'm doing so I can confidently say it works. You know, I used to try to pay like when I was in debt, I'm gonna pay this company this much, pay this company this much, pay this company this much. And I'm just like, oh, I'm wrapped up, you know.
Yeah.
So then debt stack and say, okay, nah, Mayo, pay this card off. This 250 that you paying, you ain't gonna miss it. You had to pay it anyway. You ain't never got free money if you in debt. There's no such thing as I got extra money, because extra money can go to another bill and you
Yeah.
just pay everything off quick.
Yeah.
And it shoots your credit up when you do it with your card.
Yeah. And well, my bank, and they told me like when you get a loan, even on a
Mhm.
house loan or a mortgage or a car loan, you pay that monthly bill. But on top of that, if you can, you add a little extra on the interest, and it knocks it on down.
Knocks it down, yo.
You could pay like an extra $50 or $100 and knocks the interest down, because if you don't pay any extra, you just paying on the interest on it.
Yep.
But
And
when
so if I'm
you
debt stacking, I done paid this off.
you're not even paying on the interest, you just paying the payment.
Yep.
But when you pay extra on it, you paying on the interest of whatever it is. So
And I learned that through a payday loan that I was paying. She was like, if you pay more, it'll knock it down quicker.
yeah,
And I'm like, okay, paid it more, knocked it down quicker. And they report to the credit, so it kind of shot my credit up a little bit. So I'm like, okay, I'm getting it now. I need to pay a little extra. That's why debt stacking is so important. You take your smallest bill, pay it off, and whatever you were paying on that, add it to the next one. So now you're paying $250. You had another bill that was $100. You paid $350 on it.
yeah.
So
That's extra money that you got. You got to do something with it. So
you gotta do something with it. You were spending it anyway. Might well spend it on getting out of debt and not saying I'm finna go buy some clothes or a expensive meal. I don't even see this 250. Let me just close my eyes and just go ahead and put it on that next bill so
yeah.
I can, yeah,
And put it in an investment if you don't want to put it on the bill, but don't spend.
definitely put
Yeah,
it in a Roth.
put
I'm screaming Roth for my people, man. Like,
listen.
cause
Wait, you
if
not
we can just,
put it in there. Put it in.
if 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 I was able to say I want y'all to look at John Doe bank account from his Roth when he was 22. He decided to put $200 a month in it up until 65, and he got $900,000. That's amazing to me. We just spend money on so much nonsense that we can just put into a Roth and just let it stack. Man, it's amazing.
And that leads me to my next thing is, what money mindset shifts change your life? And you kind of just told me, like, what money mindset shift has changed your life?
Man, being in debt, seeing, how I was raised, but most importantly, when I got grown and realized, like, okay, the habit that was forming young, it done resonated in me, and I'm starting to see paycheck to paycheck. Let me go get a loan, or let me get a credit card I can't pay for. And once I realized, like, okay, I'm getting paid this amount, and when I look at finally break down my checkbook, as the old folks say,
Yeah.
and I'm spending out half my money on debt, it's switched.
That ratio, man. Your
Yeah,
debt ratio to income rate.
man, erase it. I used to be like, I used to look, man, I used to look like, am I crazy? I gotta be crazy.
Like, I'm bringing $500, but my debt is $2,000. When
Yep, yep.
you go,
So that shifted.
yeah, yeah,
I messed around and seen, I just seen some numbers and I was just like, wow. So if I shift this around here and there and I start debt stacking, I can start seeing more
yeah.
than what I'm putting out. So that shifted and growing up and just being grown changed my mindset. People I tell for y'all ain't broke enough. Y'all ain't been broke for real.
No,
Y'all ain't been broke for real.
no.
Or you gonna still want to be the same person. Broke or change it.
That mindset, man, it goes
Yeah, it's gonna change your mindset.
that mindset. You gotta have that mindset where when you gotta be sick and tired of being in the place where you at.
Yeah.
Get sick and tired of being in the place where you at. That's when your mind shift to start changing.
Mm-hmm.
And what people don't realize it that it takes money to make money.
It definitely do.
And every time you bring something to the table and it sounds good, but when you start saying, all right, now this is how many of you like this, raise your hand, or this is what it's gonna cost you to do this. And then everybody like,
That I gotta pay. I
you
thought I was supposed to make free money.
right. I don't know about that. I don't know. They don't. We'll invest in everybody else's project, but we would not invest in our own self.
No, we won't.
You know,
We fear. I think that comes from just a failure over the years of saying, if I invest in myself and fail, it don't hurt worse if I invest in somebody I don't know and fail. Because I've been failing all my life. So fear keeps us from trying these things. Fear keeps us from getting outside of that box.
that's good right there.
It's the fear of it. I fear failure for myself, so I'm not gonna try these things. I'm not gonna put my money somewhere else and I fail. But I invest in you. If I fail, I can blame you. I ain't gotta blame me. You know, accountability, all that, man. It goes into it. It
Yeah,
goes into it.
and that goes back to the mindset. Like I say, I want to invest in me
Yeah.
versus investing in what you have. I mean, what you have may be good, but what I want is better because I'm investing in myself.
Hmm.
If I invest in myself and I invest in you at the same time, that means I'm gonna buy the product, but it's gonna help me be a better person. Then it's a win-win deal. Because if
Yeah.
I like what you putting out, like insurance, if I like what you putting out, well, I'm investing in myself at the same time. I'm investing in you too.
True.
We both make the money. So, we don't like to invest in ourselves at all. It's like, and then you start talking about it costs money to do that. Oh no.
I'm not hearing it. When you hear cost, I'm going deaf
Yeah.
because I want things free. I want things easy. I don't want to have to work for.
No, never. Anything that's worth having is worth
Yep,
working for.
that's true.
And so if you want to be financially debt free, and you gotta work at it. You gotta change some of your habits. You gotta change your mindset and look at, okay, what is my debt ratio to my income? What
Yep.
can I cut back? What can I pay off? Like you said, what can I stack right here to go and get this paid off? And then I got extra. Now that you got extra money, you can still invest that in something.
Hmm.
You can invest in some insurance. You can invest in a go get you some stocks because I like stock market. That's what I invest.
Yeah.
That's what I'm looking at, which I like. That's one of my things I like to invest in, like different stocks. And I tell people all the time, whatever you spend the most money in, you need to find you some siblings got stocks
True.
and buy you some stocks in it because eventually if you buy so many shares and you part owner of it.
True.
That's another way generational wealth. You know.
Like that, what you just said there is so golden. Cause you know how many people spending money places and ain't, and man, get you some shares in it. Like, get some ownership.
How many
Yeah.
times you go to Walmart? The Walmart got shares. How many times you drank a Coke or Pepsi or any kind of drink if you drank it,
Hmm.
why not go buy the stock? Target, all that kind of stuff that you spend, Publix, all that stuff, man. You get all these name brand shoes and clothes and you helping people become wealthy and not just saying, you know what, I'm gonna take that money I'm gonna spend on these clothes and I'm gonna go buy me a share in the stock.
Buy me share
Yeah.
stock. Give me some ownership in it.
Give me some
It's
own.
like like you paying yourself now.
Yeah, he can't. Yeah, so not every time I shop, like you said, I'm paying myself.
I'm paying myself. You know?
Generational wealth, man. Yes, I do. Yeah.
It's so many ways that
So many
it's so
ways.
many ways that
That's
it's
why I
amazing.
said you need 7 streams. You get the insurance, you can buy you some stock. And now you got that's 2 right there.
Too right now.
And like you said, you start stacking, you pay your own bill down. Guess what? Now you got free money. You can take that and get you something else.
Get you some more stocks
You
or
some yeah,
invest it. You know what I'm saying? Like, so like you said, it's a mindset.
it's
It's a
mine.
shift that has to happen in the community.
Yeah.
Yeah.
And that goes back to and this is something that who was younger, that teaching your children about money.
Yeah, true.
And that's one of those things where you can take a dollar or $2 and put it aside. You ever seen that where you take like a dollar I think it's like a week or maybe $2 a week or something like that. You can take it and you put it away and then you do it like weekly. And then like the next week you may do like $2 or
Hmm.
you may do like $3, but you keep going all the way up till you get about $50. And then you putting it back. And eventually I think you do it
Yeah.
for like a year and you can save up, I forgot how much it is, but you save a lot of money doing it like that. Yeah. Yeah, I looked that up. I got it somewhere in my notes, but you start out like the first week, you start putting in like maybe $2 or $3, and like the next week, you increase the money you put back into that account. You put it somewhere where you cannot touch it. You ain't got don't even put it in the bank. You put it somewhere. If you want to put it in the bank, that's fine. But if you put it in the bank, you need to put it somewhere where it may start making money. But You know,
High yield savings account.
yeah, and this is what I'm looking at right here. A high yield. It said the importance of saving accounts, and one of them is a high yield savings.
High yield savings account. Yep.
Yeah,
Yep.
talk
I have
about
one without. Yep.
talk about that high yield savings account.
I actually have one, and it's one of those things where if you put it in the bank, the dividend may be because if you look at your bank statement, and I'm not a bank guru. This is just from previous experience, so people don't crucify me. You know how y'all can get. If you look at your normal bank, you'll see like a 0.09
Yeah,
a dividend. With the high yields, the percentage of interest is higher. So I have one, and every month, it adds money to it. Sometimes it matches what I have in there. So it varies for me from my account. So, but the most is always $2, $3, $4. And you just let it sit up and build. Put your $25 in there and just leave it alone, and just let the interest just build up on it, and then you got to worry about touching it.
yeah, that's good stuff right there. And we think about it. Why do so many people struggle with being consistent with trying to save? And you can make that personal.
Yeah, I
Mm,
feel like because we was never taught what consistent looked like.
yeah,
Everything in life for the average American has been inconsistent, whether it was the parent or whether it was we wanted to do something, I keep saying our parent was consistent with allowing us to keep doing it, giving us the room to stop. We never seen consistency in the household. How do we build it? How do I stay like that if somebody never taught me how to be consistent, or I haven't had a model to be consistent? I'm gonna learn consistency as I grow up through trial and error.
yeah,
But if I was taught that at a young age about being consistent, then I would know better as I'm growing older. I'm gonna have to go through these certain trials and errors, but I'm consistent with this job. I'm consistent with saving. Consistent with my walk of faith. I'm consistent in these areas because I watch my family be consistent in it. And I feel like everything as we are adults. This is what a old head told me. I hate to call him old head, but it's a term of endearment.
yeah,
If you get to old head, that means you
yeah,
got it.
yeah, yeah.
That means you're good.
Yeah, you
He
got
told
you got some knowledge.
Yeah, yeah, you got something. He was like, man, everything. He said, "Hey, young buck, everything that you're going through now or have gone through is a product of your parents. They were the
Mhm.
foundation." So with me learning consistency now at this age, whenever I do have a child, I'm gonna teach consistency with my child. Be consistent with, okay, this is the route. This is what we're gonna do. We're gonna do homework at 5 o'clock every day when you get out of school. We're gonna keep that consistent. We're not gonna break it. Because if I show you that this consistency can be broken, then we done started a curse.
Yeah.
That's my own personal opinion. That's me personally. That's how I feel about it.
Well, I mean, that's true, because if you're not being consistent, that goes not just with your saving your money, but that's life period.
Hmm.
You got to be consistent if you want growth in your life. This is a purpose lab. I talk about purpose all the time.
Yeah.
But I talk about, I talk about other stuff, but it all leads to your purpose.
Hmm.
Why you were created, why you were here. But you got to be consistent. And when you find out what your purpose is and your plan is, you're not placed here to be broke. You placed here to have money where you can bless other people.
Exactly.
You can't constantly, you got that hole in your pocket and it's about to burn your hands up. You don't got paid and you're not trying to bless no
Yeah.
our parents, I'm not going to say all because some did.
Yes,
They
sir.
can teach us, about saving and put stuff back. Don't spend it all. You know what they say? Don't spend it all in one place.
You don't spend it all in one place. Yep. I used to spend it all in one place as soon as I got it.
Yeah, don't spend it all in one place. Proverbs 21:5 says the plans of the diligent lead surely to be abundance.
Amen.
So, we gotta, and that goes into with your faith, your stewardship, and your wealth. All that ties together.
Hmm.
You gotta have all that stuff in lined up. Because if you want, if you're gonna be a cheerful giver, God will bless you even more. And that way, you being a cheerful giver, then God blesses you to bless somebody else, and you continue to have. That's another way of creating generational wealth because you blessing somebody else, then God blesses you.
That's a secret there that people They ain't ready for that one.
Yeah.
You see that? They ain't ready for that conversation.
Right.
They don't know you want to be blessed for real. I'm telling you now,
Man, that seed, man.
you gotta slow them seeds, man.
Seed out there. That's that seed. You know. I'm in, and that goes back to what I was saying. Like when I invest in you, well, I'm planting that seed now because now, I'm making you better.
Mm-hmm.
And in return, because God seen that my faithfulness over what he gave me,
Yep.
then he said, okay, now I can trust you to do more so I can give you more. But as long as your hands stay like that right here, no.
Nah.
He said, I want you to be a cheerful giver. So,
No.
how can I bless you with wealth and then you just hold on to that wealth?
I was just reading the book of Acts. I love it. And they was talking about I think the guy name is Ananias. It was him and his wife. I don't want to quote the name wrong, but it was time to give and they didn't give. They tried to really take from the kingdom and God was basically just struck them down. Like, you know what I'm saying? So that was powerful. Giving is a beautiful thing. And when you sow seeds in good ground, the harvest got to come up.
I'm trying to tell you, man, it's coming.
Yeah.
Those are also streams of generational wealth. You got to sow seeds, man.
Got to sow them seeds.
You got to because
And like you said, a cheerful giver. Now I'm finna, I got to put this money here.
yeah.
Be happy. I am finna put this money here because I know you know what I'm saying, what's finna come behind it. So,
I'm planting
yeah.
that seed in that soil that's getting ready to grow.
Mm-hmm.
Yeah.
Yep.
And that's why, as younger kids, we wasn't taught about budgeting, budget at a younger age. You get a job, you put money up and all that kind of stuff, but now as you get older and you realize that, hey, I gotta teach my kids now how to budget at an early age.
Yep.
I teach my kids now about stock market. Hey, I'm gonna teach you how to buy some stocks right now. I'm gonna show you what to do. So when you get some money, we can buy some stocks and then you have your own stocks. I'm creating generational wealth because I'm buying stocks from you, and I'm showing you how to do it. And then you watch your own stocks. And then if you want to buy some more, you know how to go in there and buy more stocks. So at a younger age, my daughter is 12. She be 12 this month, and my oldest son is 21. And I show him how to do it, how to go in there and buy stocks,
Getting generational wealth.
Yeah.
Because what you're teaching,
Yeah.
they gonna teach.
Yeah. And that goes back to, at a younger age, you just broke somebody in at 24 years old, bought them got them $1 million plan,
Yeah, only million, half a million.
I have $1 million, yeah. So
$1 million, right? And I don't think she don't even understand the magnitude yet of what she does. I don't think when people come and become a client of mine, and I be so excited, like I don't think y'all get it.
grab something.
Like you said, we may not work. You want, like you said, some people they ain't gonna work till they 65. But it's one thing that's guaranteed on this earth: you gonna die.
That's a fact.
Death is guaranteed. And to know that I had read a study that said, man, most older people are dying of stress because one, they ain't got no money to leave behind them. They got these rinky-dink policies from way back in the day they've been paying on for all these years and they ain't get but $10,000 off of it. Now they got to lose their house and all this and that. When if you would have started younger, get you a whole bunch, just get you a bunch of it. Just a bunch of coverage. Because we never know the day nor hour when, you know what I'm saying, when it's our time to go. But we do know if we on that deathbed, okay, my family's taken care of. I can go peacefully. It's hurting them to know that I'm gone, but I know they take care of them. They ain't gotta want. The daddy done left the home. The daddy done passed. He ain't gotta. We had a case where this lady was married. They had a nice house. It's called income protection for a reason. The husband died. She didn't miss a beat. He left her that much. She didn't miss a beat. Now it's sad, but to know somebody like still being gone, you know what I'm saying? Money won't bring them back, but it's gonna ease pain. It's gonna make it better.
Make it better, yeah.
It's gonna make it a lot better
Yeah.
knowing that I'm
Yeah.
good, I'm set.
Yeah, it's not gonna ease the pain, but to know that that's one less thing they have to worry about,
Yeah.
while they're grieving. But like, okay, well, I'm grieving, you gone, but you left something behind for me and the family. So
You thought about it.
yeah, it makes it a little bit better.
Yeah.
You don't have to worry about going to get how I'm gonna pay the mortgage, how I'm gonna pay your notes and all this stuff. But no, I left this aside. So if
Mm.
something do happen to me, I'm thinking y'all gotta do is just go get that money, take care of
Go get that money.
it. Yeah.
And see, the people I work with, you gonna get it in no later than 7th day. You ain't gotta wait a year. Most companies, they be going with these companies off these websites and not talking to their agent. Something happened, now they looking for where's the check? Well, first of all, you ain't got no personal relationship with your agent. They just sold you something. I ain't a salesman. I'm an agent, so I'm gonna talk to you and see what's going on. And then you don't even know how much you got. It's amazing the stories that I hear. Everybody needs a relationship with their agent. Somebody just selling them, like, you need to stay in contact.
Yeah.
Keep knowing what your policy, because policy changes. There's shifting policies that people don't know about. If you had a policy that was $65 and all of a sudden you have a annual increase that you didn't even know about, and now it just continue to increase. Now you're like, well, it was 65, now I'm paying 85. What's going on? Well, your agent didn't tell you that you had an automatic increase in premium
Mm,
because it's gonna help them out. You know what I'm saying? So it's tricks and trade that people need. You need to have a relationship with your agent, not just
yeah.
somebody you don't.
All right, man. We get ready to close up out of here, man. Give me some closing remarks.
Closing remarks, man. Let's be smart. Let's be disciplined. Let's put our money in places that's gonna work for us. We don't work for the dollar. We make it work for us. Let's start these savings accounts. Let's start these mini Roth IRAs for our little ones. Or remember the rule of 72. Put 1,000 in, let it double, and just be patient with wealth. It's brick by brick. You don't want nothing overnight because you're gonna lose it overnight. So take it brick by brick, build that wealth, and we're gonna do it together. I'm gonna see y'all at the top, man. Y'all meet me at the top.
Yeah, so if we get out of here, man, if y'all this week if you got a savings account, if you don't have one, think about getting one.
Give you one.
Yeah, and then if you do have one, transfer about $25 in it and just let it sit. And then every time you get paid, that's what I started doing. Put like $50 in there, here and there. Just let it sit. Because
That's it.
wealth is not built overnight. It's built through consistency and habits repeats over time, over again, over again. You keep doing it. So generational wealth isn't about having money. It's about having money for your children. It isn't about leaving money for your children. It's about leaving wisdom,
Yeah.
discipline, and opportunities that can outlive you. That's what generational wealth is. It's about leaving a legacy.
Our legacy.
Legacy, man.
Yeah.
Leaving wisdom, discipline and opportunities that's gonna outlive you. That's when you can do that, you've done yourself a good deed. So hey, y'all, thank y'all for listening to us tonight.
Sure.
This is the Perfect Lab. I'm Marlon Vickers. This is the place where lives are changed. We help you find your purpose. We help you get to the place where you need to be in life, whether it's talking about generational wealth, or it's talking about the housing market, whatever it is, talking about your pain to purpose. We've done all of that. This is episode 16. Go
Yep.
check out me on Spotify. Go check my podcast on iHeartRadio, Apple Podcasts, YouTube. Go follow the Purpose Lab. I got 16 episodes already, 17 now. So go check them out and let me know what you think. Hey, matter of fact, this is what I got for him tonight from my this is my shirt I got for him right here.
Appreciate it.
Shirt. Matter of fact, I'm gonna take it out and let you see what it look like, and I'll put it back in. This coming from ipress.org. This is what
Shout out Buys Press for the merch.
press for the merch. I got some merch. This is what it looks like right here.
Yes, sir. And you got the best color in the world, that's blue.
Got a Purpose Lab. So if you want one, let me know. I got these shirts. I got coffee mugs and I got tumblers. So if you want one, let me know. I'll give you a price on it. But hey, have y'all self a wonderful night, wonderful day. Catch us again on the next episode. Peace.